Hello, and welcome to the CAIIB Guru channel. In today's session, we are diving into an essential topic for CAIIB preparation: credit risk. This topic is critical for understanding how banks handle risks that arise from lending and other financial activities. So, let's break it down. Credit risk is essentially the risk that arises when a borrower or counterparty fails to meet their financial obligations. This means, when the borrower doesn't repay the loan, doesn't pay the interest on time, or fails to make payments when they are demanded. The most common occurrence of credit risk is during lending activities, but it doesn't stop there. It can also arise in cases of guarantees, letters of credit, or even through Treasury transactions. This is the risk a bank faces when payments aren't made as expected, leading to potential financial losses. Let's now look at the different types of credit risk that banks deal with. 1. Direct lending risk. This is the most straightforward type of credit risk. It arises when a borrower defaults on a loan either by not repaying interest or failing to pay back the principal. The result? A shortfall in the amount due, which may eventually be written off in the bank's profit and loss account. 2. Non-fund-based credit risk. This type of risk is seen in situations involving guarantees or letters of credit. Here, the bank is not directly lending money but rather providing a guarantee. If the borrower fails to meet their obligations, the liability might crystallize, and the bank is required to fulfill the payment. 3. Treasury products risk. Banks also face credit risk when dealing with Treasury products like trading in securities. If the counterparty in a trade fails to make payments or settle trades, the bank faces credit risk due to the cessation of these payments. 4. Cross-border risk. This risk occurs when international transactions are involved. For example, if there are currency restrictions in a foreign country, the transfer of funds might be delayed or blocked, creating a scenario where the bank cannot recover the expected payment. Managing credit risk is not just about ensuring payments are made on time. It's about the overall financial health and stability of the bank. In fact, credit risk is one of the major risk categories for most banks, typically accounting for more than half of their total risk exposure. So, effective credit risk management is crucial to preventing significant financial losses, ensuring that the bank's lending and non-lending activities do not jeopardize its profitability, maintaining a healthy balance between risk and reward in its loan portfolios and other activities. Managing credit risk in a bank is a multifaceted process. Here's how it's typically done. 1. Clear communication across the organization. First and foremost, banks need a clear credit risk management policy. This policy must be communicated across all branches and controlling offices so that everyone is aligned on how credit risk should be handled. A consistent approach across the organization helps in building a balanced portfolio with the right risk characteristics. 2. Proactive risk monitoring and assessment. Banks continuously monitor their credit risk exposure through regular assessments. This includes reviewing the creditworthiness of borrowers, tracking the performance of existing loans, and identifying potential problem areas before they escalate. 3. Integrated risk management. Credit risk is not confined to just one department. It's an integrated responsibility, involving various departments working together to mitigate risk. By coordinating efforts across the entire bank, credit risk can be managed more effectively. In summary, credit risk is an inherent part of a bank's lending activities, but it extends far beyond loans to include guarantees, letters of credit, treasury operations, and even cross-border transactions. Managing this risk effectively is vital for the financial stability and long-term success of the bank. That's it for today's video on credit risk. I hope this breakdown was helpful for your CAIIB preparation. Make sure to like, subscribe, and hit the notification bell so you don't miss out on our upcoming videos.